Today we have Raymond, which reported muted growth in the first quarter. In fact, the revenue also saw significant pressure this time around. We have been talking about weak demand. So to discuss the quarter, the outlook and lots more, we're joined by Mr. Amit Agarwal, Group CFO at Raymond. Mr. Agarwal, thanks a lot for joining us and welcome to the show. First up, just give us a sense of what the demand environment has been like. I mean, I know it's been sluggish. We've all been talking about this as well. But how is it looking now since we are, well into Q2, and how is it likely to pan out?
Yeah. No, thank you for having me on the show. I think the fundamental is that we have seen the sluggishness in the demand right from January onwards this year. And then we expected that end of January, when the weddings come back, and there you would see things coming back to normalcy. But that has not come back. But as far as us is concerned, our business is concerned, if you see in this quarter, even in the fourth quarter, we had reported very strong numbers. And in this quarter, if we talk about our branded apparel business, which is consumer-led business, and branded textile, both have shown a growth. Especially on the branded apparel, we have shown a growth of 16% compared to last year.
Just talking about the demand, sir, is there a possibility that Q2 will also be a bit muted because the wedding season has been pushed forward? How would you assess the demand right now?
In India, or under the Hindu calendar, you have this concept of every 3 years, the concept of Adhik Maas, 1 extra month, which delays everything by 1 month. So therefore, what used to be a Pitha Paksh where people don't buy used to be finished, let's say mid-September, around that time. Now this time it is getting shifted to mid-October. And then post that, the Dussehra, Durga Puja and Diwali would come. And then the wedding seasons. So actually there is a little bit of a delay, everything. So whatever sale we have seen historically happening in the second quarter, which used to be a good quarter, will get delayed by almost a month.
Okay, so there are going to be some delays because of the timings, the calendar this year. Amit, also a lot of players on the apparel side are resorting to price cuts, a lot of discounts in the market. Have you done that in the first quarter? Would you be looking at more discounting, say, in Q2 as well?
Look, in terms of the price cuts or such things, you have typically 2 times end of season sale. We saw this time end of season sale starting little early. And the discount range, which used to be a certain percentage, has increased by 300, 400 basis points. But as far as the festive season and such thing is concerned, you see, all of us, all the players in the market will behave in a rational manner. And therefore, we believe that we can't be away from the market, but we will be also seeing, because of the product range, the exclusive launches which we have, the Ethnics by Raymond, which is going to see the first time the true testimony of its wedding range in this year after having almost 100 stores or so. We would be witnessing that kind of phenomena and see the growth for our products, especially in the ethnic sale and the apparels.
Okay, that's good to hear. Amit, speaking about the stores, you're also guided for an aggressive store expansion plan, right? Around 450 to 500 stores is what you're looking at in the next 4 years in a franchisee model. What kind of revenue growth do you think you will see in the apparel space? And also, what is the kind of margin band that you'll be functioning in for, say, the medium term?
Sure. No, first of all, you are absolutely right that we are planning to open 450 to 500 stores over the next 3 to 4 years. The average store, after a maturity level, some stores mature in 15, 16 months, some takes 2 years, some takes 2.5 years. But anything of this level of store, I think with a level you should be expecting, we are not opening anything less than 1,200, 1,400 square foot store. So anything between 1.5 to 2 crore per store, we are expecting on a matured level basis, these sales to deliver.
Okay. Out of the 9,000 crore worth of projects being launched, I understand 50% are already booked. What kind of timeline do you see for the remaining 50%?
I think we are on a very fast trajectory of booking. If you look at it, when we launched a project, as I said, the first 2 projects which we launched are 85% booked. The third project which we launched in the end of February, that is also 40% booked. Even the fourth project which we launched in July, I can give you just a simple perspective. 50 apartments got sold on day 1. So I think from a booking standpoint of view, we are at a very, very fast velocity, and sales velocity has been actually a hallmark for the Raymond Group in terms of the real estate business.
Okay, Amit, just tell us overall for the year as a whole, FY24, what is the revenue and margin outlook? Can you leave us with some rough guidance?
So I think we are seventh quarter in a row where we have consistently performed and beaten that quarter-over-quarter numbers compared to first quarter to first quarter. This year, again, we have delivered the highest revenue, highest margin. I think we feel very confident of achieving the same level of margins which we have delivered last year, in spite of weakness in the first 3-4 months of 6 months, so to speak, on the demand of the consumer.
Okay, all right, Amit, we'll leave it on that note for today. Thank you very much for joining in. So that's Q1 and how Raymond is looking at the next couple of quarters. We'll take a break on that note on the